Wall Street on Wednesday reacting was deeply concerned about Trump's big, beautiful bill, but Thursday, some markets stabilized somewhat. The Dow slipping just a couple of points to close basically unchanged on Thursday. The Nasdaq up, but only slightly, and the S&P 500 ended the day nearly flat. Investors are still grappling with fears of rising rates and worried about the ballooning U.S. deficit. The 30-year Treasury yield hit its highest since October of 2023. As lawmakers passed that bill, investors fear could significantly worsen the deficit. Okay, joining us to talk more about the markets is Chad Willardson. Chad is the founder and president of Pacific Capital. Chad, welcome to the program. Thanks for taking time to chat.
Yeah, thank you for having me on your show, Sean.
Okay, a lackluster $16 billion auction of the 20-year U.S. Treasury bond really in many ways intensified concerns about the nation's fiscal health. How do you think investors are reacting to the news? What's your big takeaway from that?
I think it's a wake-up call. It's not really a surprise for investors. You know, markets are reacting to years and decades of just kind of unchecked federal spending, and I think it's good for the government to see that you got to deal with the markets in real life. You know, not every investor is just going to accept what's happening these days. So it is a wake-up call, and I think it's healthy.
Kind of dig into that just a bit more. Do you think that they're skeptical of the way this is going to work? Do you think that they're concerned that it could be quite the boon for the wealthy, whereas programs that really go to benefit those in the lowest economic run really stand to lose? And also the fact that this could raise the deficit by $3 trillion over the next decade.
Yeah, I would think the concern is more about the deficits than really the cuts. I think it's about the spending. So investors rightly so want to hold our government accountable. And so when we look at what's happening and the borrowing and spending that we've been seeing for so long, I mean, last year alone, 2024 fiscal year, I believe the number is about 1.83 trillion. Like, we overspent by 1.83 trillion, and we don't want to see that continue because it's headed in a place that really takes us into an unsustainable path of fiscal responsibility. So it is about keeping the government in check and making sure that our spending is on track to really get to a healthy place of fiscal responsibility.
Yeah, but for all his posturing, Trump added more to the deficit than any other U.S. president, and now the House narrowly approved this expansive tax bill. It's going to go to the Senate, and it could be altered somewhat. But if it does really add $3.8 trillion to the national debt over a decade, we saw what markets thought on Wednesday, finishing down significantly. Today, what's your thought? Why was there virtually no change in the markets today?
Yeah, that's a great question, Sean. I get asked that all the time when something exciting or interesting or sometimes scary is happening in the news. It's like, what should investors be thinking about today? And our message to our investors is really think about the long term, control what you can control, focus on your goals and a longer term investment plan, because so many things happen, and it's like predicting interest rates. You know, people have been saying mortgage rates are going to come down, interest rates are going to come down, and yet it hasn't happened for years. And it's like, that's why real estate inventory is not moving. So if you make investment decisions on what is happening in the moment or in the week or in the day, you're most often going to be disappointed. So our counsel to investors is really to focus on the long term and have a goals-based investment plan, because right now it is bumpy. It's a turmoil that we're used to in the markets. I mean, that's really what the stock market does. It brings volatility, we expect it, and sometimes we get complacent thinking it's just going to continue to go up without any challenges.
Yeah, but the markets hate to be surprised, and I think that one thing is the fact they can't tell from week to week, what does Trump want? Is he using the tariffs to actually generate tax money? Is he using the tariffs as a negotiating tool? And we've seen European and Asian stock markets follow the decline that we've seen from the U.S., so let's talk about some other assets, such as gold, Bitcoin, and oil prices.
Yeah, interesting to see what's happened in gold in the last decade. Bitcoin has certainly spiked. I think there's concern about what is the future of the dollar. You know, what is the future of the American federal fiscal policy? How is that going to play out? And what I would say is, you know, your guess is as good as mine, Sean. I can't predict necessarily what's going to happen from everything that's going on right now. I do know that anytime there's a change in the administrations, it's a little bit messy. People bring different philosophies, and it takes a little bit of time for it to work through. So I'm going to tell investors to be patient. What we also tell investors is don't base your portfolio strategy on administration to administration. We need to be smart making money no matter who's in the House, who's in the Congress, and who's running the country. I'm not sure how this is going to play out with the tariffs. There's some positives. You know, we've seen positive news for exports. We've seen positives for investments coming into the U.S. It does make it more attractive for tourism. I saw Toyota and Mazda from Japan making huge manufacturing commitments here. And then there's negatives. You know, there's countries that don't want to do business with us right now. So it's hard to say how it's going to play out, but what we're watching really is for the clients to make sure not to panic or overreact when something like happened this week or April 8th, April 9th, when the markets just took a huge dive because of the tariffs.
Yeah, and also, Chad, well, this is a conversation for another time, but next time we need to talk about the downgrading of the U.S. by Moody's, too, because that's something that's certainly not going to be good. But always a pleasure, Chad Willardson. Thanks for your insight.
Thank you for having me on, Sean.